Namaste and good morning. Welcome to the 16 Aane Daily Brief. Today is Wednesday, April 22nd, 2026. Markets reversed, Q4 results came in mixed, and fresh data shows where India Inc. is leaning into FY27. First up, today's headlines. Headline 1. Markets snapped their 3-day winning streak. Sensex closed 757 points lower at 78,516. Nifty slipped 198 points to 24,378. Profit booking hit hard after yesterday's US-Iran ceasefire rally, with HCL Tech the single biggest drag, down nearly 8% on its earnings miss. FMCG and realty held up, while mid-cap and small-cap indices closed green. Headline 2. March core sector output contracted 0.4% year-on-year, the worst print in 19 months. Full-year FY26 came in at 2.6%, a 5-year low. Fertilizers collapsed 24.6%, crude slipped 5.7%, coal and electricity also fell, but steel was up 2.2%, cement 4%, and natural gas a striking 6.4%, its fastest in 22 months. Headline 3. The United Nations projects India at 6.4% growth in 2026 and 6.6% in 2027, with inflation moderating to 4.4 and 4.3. Steady, but softer than the more bullish domestic calls. Now, the big earnings cluster. 16 companies reported Q4 and the split story is real. Tech Mahindra surprised positively. Profit rose 16% year-on-year to 1,354 crore rupees. Total contract value for the year hit $3.79 billion, up nearly 42%. That AI and deal pipeline story in IT services is quietly turning a corner. Retail had a blockbuster day. Trent, the Tata Group company behind Westside and Zudio, posted a 32.6% jump in profit. Havells India beat that with 39.6%. When a discretionary apparel retailer and an electricals company both grow profit by over 30% in the same quarter, the urban consumer is still spending. The counterpoint, Tata Communications. Profit crashed 75% to 263 crore. Telecom enterprise services are under real margin pressure from AI-led disintermediation. For MSMEs, two signals. Urban discretionary is holding. If you're in apparel, electricals, or consumer durable supply chains, push inventory and raise prices selectively. Be cautious on enterprise telecom vendors. Margin compression means tighter payment cycles downstream. Now, a story hiding inside FY26 trade data. India's full-year exports to the US stood at $87.31 billion. Basically flat. The trade surplus with the US actually narrowed, down to $34.41 billion from $40.88. But look where the growth went. Exports to China surged 36.7% to $19.48 billion. Read that again. Exports to China, up nearly 37% in a year. India is quietly finding new export volume in the corridor most people assume is closed. The backdrop, the 50% US tariff in force from August 2025 until February 2026, when the US cut rates back to 18%. Indian exporters spent 8 months looking for alternatives, and some found buyers. Add today's bilateral trade round concluding in Washington, and the structure of where Indian goods ship is changing faster than the headlines suggest. For MSME exporters, 3 takeaways. 1. If you've been US dependent, the last 12 months validated why diversification is survival, not nice to have. 2. China demand for Indian intermediates and specialty chemicals is real. Scope buyers now. 3. Hedge your currency exposure. The rupee is steady at 92.6 per dollar today, but RBI's oil importer credit facility is doing quiet work. So, what does today's news stack mean if you're running a business? 1. The core sector print is a soft signal. The 19-month low plus fertilizer and crude collapse points to genuine demand slack. Manufacturers, pull inventory days forward, push working capital discipline for the next 2 months. 2. The EV numbers are quietly historic. Passenger EV sales grew 83.6% in FY26 to nearly 2 lakh units. Tata Motors at 78,811, Mahindra quintupling to 42,721. Auto components, charging infrastructure, lithium supply, the curve just steepened. 3. SBI will chase a 1% market share gain in each of 800 districts in FY27. If you're in a Tier 2 or Tier 3 district, Expect better credit limits and faster MSME approvals. Lean into that. 4. The GST Fresh Document Series deadline passed on April 1st. If you haven't reset your invoice, credit note, and debit note numbering, do it today. GSTR 1 mismatches from carried over series are the most common April scrutiny trigger. That's your 16 ANE daily brief for today. If you're thinking about buying or selling a business, head over to solaane.com. That's 16ane.com, where we make business deals Sola Aane Pakka. See you tomorrow.